welcome to Prime Property, your weekly real estate reckoner. I'm Nayantara Rai and here's what we have on the show today. Knight Frank observes a slowdown in India's most speculative market, the National Capital Region. Is there reason to worry? Should you be alarmed? Jaypee says its launches near the Gautam Buddha F1 Grand Prix have been a roaring success. Is it worth your money? Mumbai-based Oberoi Realty has zero debt, $200 million in cash, but hasn't launched a project in 2 years. Over the last few weeks, we have been discussing just how subdued the commercial and residential market has been in Mumbai. We've had several developers and experts on the show talking about how recovery of the Mumbai property market is still a little distant. Today, we'll talk about the National Capital Region. The NCR is often called India's most speculative market. It's a large market covering New Delhi suburbs, Gurgaon and Faridabad in Haryana, as well as Noida, Greater Noida and Ghaziabad in Uttar Pradesh. Analysts often say that nearly 50% of the investments in the NCR is driven by investors. How people in the NCR have a large propensity to invest in real estate. So when international consultancy firm Knight Frank observed a slowdown, our antennas went up. If the NCR market slows down, what will be the fate of other cities? Knight Frank points out a sluggish demand and fewer project launches in the NCR. Nearly 35,000 residential units were launched from October 2012 to March end of 2013. That's a dip of 31% year-on-year. So in light of weaker demand, it does seem as if developers have kept a check on new launches. The liquidity crunch being faced by real estate companies is yet another reason. And developers continue to cope with the pressure of finishing delayed projects, thus very much on the prowl for funds to finish construction. Knight Frank says Noida and UP has witnessed a steep dip in launches in the second half of FY12. It pegs 135,000 residential units have been announced in Noida, of which nearly 20% or 27,000 apartments are unsold. Knight Frank says Noida's loss has been neighbouring Greater Noida's gain. Greater Noida envisaged as a self-sufficient city mushrooming along the Yamuna Expressway and is today viewed as a more affordable market. Here's Knight Frank with its outlook and prevailing price per square foot.
In Noida, we have an average weighted average price of about 5,200, and in Greater Noida we have an average weighted price of about 3,100. So there is a significant difference in terms of the kind of end users or investors that they cater to. It's roughly, Greater Noida is roughly available at 60% of what Noida is available at.
Now the worrying part is this: the NCR residential market has an estimated 140,000 unsold units, out of which 66% are concentrated in Noida and Greater Noida. So if you choose to invest, do keep that in mind. Also, we've hardly seen any launches of late in the 25 to 50 lakh rupee bracket, which is what had primarily attracted buyers to Noida in the first place. Now, Gurgaon, or the Millennium City, is perhaps NCR's best performing micro market. Here you have more expensive properties when compared to Noida and Greater Noida. There's also massive development around the proposed 25-kilometer long Dwarka Expressway near the border of Delhi and Gurgaon. Despite the expressway's construction being stalled, we are seeing significant buyer interest. This part of Gurgaon is now referred to as New Gurgaon. It's attracted all the big builders, from Indiabulls to Mahindra Lifespace to Tata Housing to Sobha developers. According to Knight Frank, 120,000 units have been launched in recent times in Gurgaon and New Gurgaon, out of which 19% or 23,000 apartments are unsold. Now, even though the percentage of unsold inventory in Gurgaon is the same as Noida, Gurgaon scores higher in sales velocity. On an average, 5,000 residential units are sold in a quarter in Gurgaon, and that's double of what is sold in Noida.
In terms of price appreciation, Gurgaon is a market which has seen very good appreciation. In terms of yearly numbers, we've seen more than 30% rise in terms of numbers in the Gurgaon area. In terms of the new Gurgaon area, we've seen more than 50% on an average in terms of price rise. On an average, last year we had seen projects getting launched between 4,500 to 5,000. The numbers right now are about, you know, between 6,500. So almost a 50% increase in Gurgaon. So that's been most exciting in terms of price increases. So I would expect a better price appreciation compared to the Noida, Greater Noida market in Gurgaon.
Faridabad, also in Haryana, is a much smaller market with about 25,000 units available. But there are expectations of more launches once it's connected with Delhi and Gurgaon via the metro.
So Faridabad has an average weighted average price of about 3,300. I would expect that in times to come, as the interest in the market increases and we see a number of developers look at launching projects in that region, I would expect the weighted average price to start inching up significantly. The kind of projects that are being offered right now are not the high-end luxury ones. We are largely seeing mid-income projects that are being launched out there.
Ghaziabad, another small suburb, is seen as a cheaper alternative to Noida. Knight Frank pegs total units on sale at 74,000, but it does have a high unsold inventory at 32%. The average price here is around 3,100 rupees a square foot. So which is a better bet, Faridabad or Ghaziabad?
I expect appreciations to be in the range of about 10 to 15%. It won't be as much as what it is available in a Gurgaon, but it will be decent in that sense. So between 10 to 15% is what I expect appreciations to be in Ghaziabad as well. I would really think that in times to come, Faridabad should really pick up well compared to Ghaziabad.
Earlier this month, Jaypee did a site visit in Noida with analysts and investors, including those from influential brokerage firms like CLSA. Jaypee Group's executive chairman, Manoj Gaur, was also present. Jaypee Group's most ambitious project has been the construction of the 165-kilometer-long 6-lane Yamuna Expressway connecting Noida with Agra. Besides getting nearly 4,000 acres from the Uttar Pradesh government for building that expressway, the company also got around 6,000 acres divided in 5 land parcels, all for real estate development. All of this was hived off and listed as Jaypee Infratec in 2010. So far, Jaypee had launched one of these parcels, the one in Noida, which goes by the name of Jaypee Wishtown. Jaypee got a lot of flack from buyers for being late by up to 4 years with projects here. This January, Jaypee Infratec had called off its offer for sale on account of poor market conditions. No doubt, the analyst meet is a precursor to Jaypee Infratec's fundraising plans, which the company will have to undertake before June, which is SEBI's deadline of meeting that minimum 25% public float norm. Manoj Gaur had told Prime Property just last month that Jaypee Infratec would cut its 6,800 crore rupee debt by 2,000 crore rupees quite soon. How that would be achieved was actually unveiled at the analyst meet. The company will pare its debt by selling nearly 400 acres of land to mid-sized developers and HNIs. Besides that, we've also seen 2 recent launches. Few minutes from its Gautam Buddha F1 Grand Prix circuit, Jaypee has launched Sunnyvale Homes, a project comprising of residential plots. These plots will be part of Jaypee Green's Sports City Township, and the base price has been fixed at 27,200 rupees a square yard. As you can see here, there are 5 plot sizes available with a base price ranging from 41.61 lakhs to 65 lakh rupees. Possession is 18 months after the provisional allotment letter is issued. Analysts feel the price tilts on the more expensive side, but the premium is for accessibility via the expressway and also for being so closely linked with the F1. Jaypee though says it's got a great response and may even hike prices. The company also recently launched studio apartments at the Sports City. Jaypee says the first phase of this project, Buddh Circuit Studios, was made up of 1,600 apartments and sold out within 4 days. The base price was 3,290 rupees a square foot. Here are the details. Jaypee is now gearing up for phase 2. The base price of that has been increased by 100 rupees to 3,390 rupees a square foot. So if the specifications remain the same, the studio apartments will cost just shy of 19 lakhs and 25 lakh rupees a piece. Analysts we spoke to are divided on what they make of the project. The price is attractive, it's again very accessible via the expressway, and its sales pitch includes the connection with the F1. But the studio apartments are obviously small. So are the buyers the actual end users that will work in the vicinity? Or are the buyers who are investing hoping to lease out these apartments to those very professionals? Oberoi Realty is sitting on $200 million of cash, has zero debt, but hasn't launched a project in 2 years. The company, in an exclusive interview, will tell us what its future plans are. That's coming up after this break. Stay tuned.